Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Azwan bin Azadi. My number matric is 23DIB21F1019. Remittance practices in Malaysian banking institution. When you remit the money, you transfer it from one place to another. Often due to the countries, remittance practices in Malaysia banking institution involve the transfer of money out of or into the Malaysia from various purposes such as personal, business, investment or other reason. Credit card. A credit card allows you to borrow money up to a certain limit and pay it back over a time with interest. Credit cards typically have a lower fees and interest rates than charge a card and are useful for managing cash flow and building credits. For a charge card requires a balance to be paid in each month. This type of card generally offer a reward and other benefit, but typically has a higher annual fees and interest rates. Charge cards are useful for those who want the convenience of a credit card but prefer to pay off their balance in full each month. Debit card. Debit card is a link to your bank account and allow you to spend money on in your account up to a certain limit. Debit card don't earn a reward but are useful for staying in budget and avoiding a debt.
Hi, my name is Farid Zohri bin Mazan. My matric number is 23DIB21F1031. So, definition of charge card. A charge card is a payment card that allows a card holder to make a purchase without buying the full balance at the end of each billing cycle. Unlike credit card, which allow card holder to carry a balance and pay interest on the unpaid amount, charge card require card holder to pay the full balance each month. Charge card typically have high credit limits and are often used by individuals or business with high spending needs or who wish to avoid interest charge. Additionally, some charge card may offer reward program or other benefit for card holder who use the card frequently. So, example of charge card by Maybank. First one is regular card. The minimum of annual income that must be required to individual to fulfill is RM30,000, and principal card holder must be around 21 years old to 65 years old. And annual fee, lifetime fee waiver, which means you doesn't need to pay any fee for regular card. Next one is gold card. The minimum annual income is RM48,000. A principal card holder must be around 21 to 65 years old, and annual fee is RM238 ringgit, and 3 years fee waiver, which means after 3 years of paying the annual fee, you doesn't need to pay annual fee anymore. And the last one is platinum card. Annual income is RM190,000, and principal card holder must be 21 to 65 years old, and annual fee that has been charged by bank RM3,250 ringgit. So the next one is advantage and disadvantage of charge card. So the first one is convenience. Charge card can be convenient way to send and receive funds as they are widely accepted and can be used to make purchases or withdraw cash. So the next is speed. Charge card transactions are processed quickly, so funds can be transferred almost instantly. The next one is credit score. Using a charge card responsibly and paying off the full balance on time can help build and improve your credit score. Disadvantage card charge. High fee. Charge card may come with high fee, including transaction fee, foreign exchange fee, and other charges. This fee can add up quickly and make the remittance process more expensive. High interest fee. If the full balance is not paid off each month, charge card can come with high interest rate, which can make the remittance more costly in the long run. Limited acceptance. Charge card may not be accepted by all merchants or in all countries, which can make it difficult to send and receive funds in some situations.
Definition: card credit. A card credit is a thin rectangular piece of plastic or metal issued by a bank or financial services company that allow a cardholder to borrow the fund with which to pay for goods and services with merchants that accept a card for payments. Credit card imposes the condition that cardholder pay back the borrowed money plus any applicable interest as well as make additional agreed upon charge, either in a full by the billing days or over a time. This is example of credit card. We can see at My Bank credit card, Islamic card, CIMB credit card, and RHB credit card. The advantage of card credit. First, cash advance. You get the money when you need it. Beware that cash advance after a higher interest rate. So it's important that you have a realistic plan to pay back those advance. Second, record keeping. A credit card provides a useful record of your spending through your monthly statement and online account, which will also be a case if you rely on a debit card for spending. Some credit cards do send year-end summarize, so that be a great resources when you are doing your tax. Third, low-cost loans. You are getting your paycheck in 5 days, but there's a purchase you need to make today. You can charge your purchase now and pay off the charge after you get paid. The key is to make you sure you will be able to pay off the charge by the due date. For disadvantage is first, interest charge. If you buy something and don't pay it off immediately, you will end up paying not only the purchase price but also the interest charge of that item. In other words, if you carry a balance, all your purchase will end up costing you a little more. Second, fees. Some accounts have annual fees. There may also be fees for cash advance, along with higher interest. In addition, you may spend more on interest and fees than you earn in discount or cashback. Make sure the benefit outweigh the cost. Third, monthly scrutiny. You must review your bill each month to confirm that it accurately reflects your purchase and there aren't any sign of fraudulent use of your card. Credit cards are a prime target for a scammer.
Definition of debit card. Debit card is a payment card that is linked to a bank account and allow the cardholder to access and use the fund in that account to make purchases or withdraw cash from ATMs. When a debit card is used for transaction, the funds are immediately deducted from the cardholder account, unlike credit cards, which allow the cardholder to borrow money and pay it back over time with interest. Debit card only allow the cardholder to spend the money that is available in the account. Debit card can be used for in-person or online purchases, and they may also offer additional features such as cashback reward or fraud protection. So this is example of debit card in Malaysia. We have Maybank debit card, Bank Islam debit card, CIMB debit card, and RHB debit card. And this is advantages and disadvantages of debit cards in Malaysia. Convenience. Debit cards are widely accepted and can be used to make purchases or withdraw cash from ATMs, making them a convenient payment option. No credit check required. Debit cards do not require a credit check, making them accessible to individuals who may not qualify for a credit card. Budgeting. Debit cards are linked to a bank account, which can make it easier to track spending and budget expenses. Disadvantages. Limited reward program. Debit card may offer limited or no reward program, such as cashback or travel point, compared to credit card. limited liability protection. While debit card may offer fraud protection, the liability for unauthorized transaction may be more limited compared to credit card. Limited acceptance. Some merchant or service provider may not accept debit card, particularly for only transaction.
Comparison features of charge card, credit card and debit card. First, how it works. Charge card allow you to buy now and pay when your statement comes, but your balance must always be paid off in full with each statement. Credit card allow you to buy now and pay later. Borrowing money, you can pay off over time, making a minimum payments. Debit card can be used like a credit card, but they pull the money directly out of your bank account. You can access your available cash with overdrafting your account. Second, common required site. Charge card must come with an annual fee and they usually require good or excellent credit. Credit card must, but not all. Credit card issue require fair or good credit and proof of income. Debit card. You need a bank account from a bank that offer debit card must do. Monthly payment. Charge card, you must pay the balance in a full every month. Credit card, you are required to make a small minimum payment monthly. Debit card, money is taken directly from your checking account, so no payment are required. Spending limit. Charge card, generally no present spending limit. For credit card, spend up to your credit limit. For debit card, you can only spend what's in your checking account. Credit reporting. Charge card, your payment history is reported to credit reporting agencies, but charge card don't factor into the credit acceleration ratio. For credit card companies report your acceleration ratio and payment history, with both affect your credit score. Debit card don't affect your credit history. Reward perks. Charge card, generous reward are available on most card. Credit card, some but not all cards are offered the rewards. For debit cards, only a few debit cards provide a reward for purchase.
Consideration of best card for remittance. Look for low fees. Consider the fee associated with each card, such as transaction fee and foreign exchange fee. Look for a card with low fee to help minimize costs. Consider the exchange rate. Compare the exchange rate offered by different cards and choose a card that offers a competitive rate to help maximize the value of remittance. Consider the acceptance. Choose a card that is widely accepted both in Malaysia and in the destination country. This will help ensure that the recipient can easily access the fund. Consider the security features. Look for a card that offers strong security features such as fraud protection and PIN-based transaction to help protect against unauthorized use. Lastly, in conclusion, based on those factors, a debit card may be a good option for remittance purpose in Malaysia. Debit cards are widely accepted, have low fee and can offer strong security features. However, card credit may also be a good option if you have a good credit history and can qualify for a card with a low interest rate and no annual fee. Charge card may not be the best option for remittance purpose as they typically come with high fee and may not offer the same level of security and acceptance as debit or credit card. Lastly, the best card for remittance purpose in Malaysia will depend on your individual needs and circumstances. It is important to compare the features and fee of different cards and choose the one that best meets your needs. So that's all from us. Thank you.